Welcome Home Radio Podcast. Are you looking to buy or sell your home? Our team is here with answers to guide you through the buying and selling process. We encourage you to ask questions. Please comment on this show or visit us at welcomehomeradio.net for more information. Bringing real estate, lending, and education together in one place, and to help you make the right home decision for you and your family. Here are your hosts, Blair Thomas, Tom Holm, Alan Pace, and Jeff Duffy.
And good morning. It is April 26th. We're just so happy you're here. Welcome Home Radio, where real estate, lending, and learning come together. Welcome guest, or I shouldn't say guest, fellow host, Jeff, Tom, Alan. Hope y'all are doing well.
Good morning.
Good morning.
Good morning.
We're going to, well, wow. What was that? What was the Addams Family butler? Lurch. That's what exactly it sounded like. But hey, we're ready to finish up our real estate bingo card today. So we want to jump right in because we've got a lot of squares to fill here. Can we bring up our real estate bingo card? There we go. And we're going to take you, position one, know your credit score. So let's start off with know your credit score. Why is a credit score important to you, period? Why you're not doing a mortgage, you're not doing anything, but gentlemen, why is a credit score important to everyone out there that could be listening, ever hear the show at all? What's one reason?
Credit influences everything.
Purchasing power.
Future
Influence?
spouses.
It's what? You pull credit even for weddings?
Yeah, if you're going to get married, I want to know beforehand.
That's the new thing, Blair.
Boy, howdy, where have you been living?
Evidently, I'm not searching for a spouse, so
Evidently.
I got a good one. Yes, your credit score impacts everything from job, your promotability at the job that you're at, purchasing a car, insurance, the rate you receive, student loans. Credit impacts you across the board, not just during purchasing of a home or purchasing of a car, but it deals with, I had my dentist working, thank goodness, being a veteran, but the dental industry pulls credit whenever they finance for cavities, braces, whatnot. So credit is everywhere, and credit. Now, how do you establish credit? If you're a good parent and you understand you want to help your kids get out, what's one thing we could all do? And it was just recommended, Jeff, you were there. What can be done as a parent for a child? And you don't tell the child about it, but what can you do to help their credit?
Since I was there, I wasn't going to answer. So
I know.
So add them as a not borrower, authorized user on your credit card. They will get a card. You do not tell them, you do not give it to them, but you are building their credit as you use that card.
How young can you start that at?
One of the panelists that the instructors had started their child at 14 and was doing the other one at 12 years of age, adding them to that card.
So your children can be creating good credit history with your efforts without having to spend anything, even be aware of it, putting your children as authorized users on your credit. They gain all of the history that you have, but that's one way they can go about getting good credit.
And I'll just tell you, we actually did it at 18 years old, and it does work.
It does work, most definitely. Now, knowing your credit score, let me ask you a question. Everybody here can get a free credit report, one by every bureau. That's 3 a year. TransUnion, Equifax, and Experian. If you get something in the mail with a credit score, or do you get scores with a free credit report? That's my first question.
No.
Why?
I don't know why.
Because FACTA says they're not allowed to.
Excuse me?
FACTA, Fair and Accurate Credit Transaction Act of 2003 says they're not allowed to.
Well,
Why is that?
That's why I don't
My
know
score.
well, no. It's not your score. It's your data. The credit, they store data. Now, what algorithm are they using to create that score? If somebody's giving you a score, they're trying to sell you something like a credit card or an auto loan or anything. They don't know which credit score to pull to
Right.
give you. So a free credit report is only data, transaction data. So each line.
But if you
on there
download their
report-
app, they will match you with the perfect credit card for you, will they not?
Yes, they will.
A lot of them will.
Boy, that
So-
fine print.
So if you're trying to know your credit score, request those free credit reports. I do it once every 4 months. That gives me a full year across the board. I try never to do any business with anybody that does not report to all three bureaus. But sometimes you have people that report to one or just two. And so one report may not have it, the other two or the other one will. So knowing your credit report, knowing how to get it, and how your scores, again, 13 different algorithms in the credit industry. And by the way, just FYI, the credit industry, the credit repair industry, the credit certificate, there is no certification for somebody to be certified in credit. Okay? There are people trained, there are people that do, but there is no qualification like franchising or a process you go through as we do as lenders or as realtors or anything in the credit industry. So if somebody tells you they're certified in the credit repair business or the credit certification, it is untrue, because there is no overwhelming CFPB type group that overlooks the credit industry. I will just tell you, a credit repair company, if you're not dealing with somebody that has a law firm associated or lawyers on staff, they're not a credit repair group that I would want you to work with, because that's what it takes to write the letters to get things straightened out quickly. So enough of that. Any other comments? Know your credit report. Let's go to our bingo card. Alan, what's next?
I want avoid large purchases for 100, Alex.
Avoid large purchases. Now, how many times have we heard somebody in the process of buying a home and they make a purchase at the last minute and they don't understand that lenders at the last minute will repull a soft pull on any new transaction, and that ends up stopping the purchase of the mortgage? I.e., I had a family, great family, working hard, self-employed, owned his own lawn care business, bought a new truck the Friday before they were closing on Monday. Well, they had a new truck and no home to park it at. Avoid large purchases in the loan process, of the home buying process. That means get approved. And that means get with your realtor, shop, make offers. We don't know how long it's going to take, but don't do anything but usables, gas, food. Basically, that's it. If you've got to get a repair of a vehicle, double check with your lender before you go in. If you can't pay cash for something, get approval from your lender. Will it affect my loan? Will it affect my ability to buy? Avoid large purchases. And that means including, in the FHA world, your spouse. You may be being the one that you're using income, but again, their liabilities still affect your mortgage because they're on it as requirement. They can be taken off in a VA world, in a conventional world, but USDA and FHA require the liabilities of the spouses or the family unit to be on, along with USDA being household income. Tom, any words to that? Anything you want to add?
What are you looking at? Big purchases. Label that so our people that are listening will understand. I mean, is that buying a TV?
Anything outside of consumables, food, gas.
Okay.
If you're charging it and you have to finance it, if you even have to rent a TV at Rent-A-Care because you want to have a TV right now, those things can wait until we buy your home.
Who are you, Dave Ramsey? What's going on here?
We know we've actually had
I'm putting them up.
Hey, we've actually had people show up to closing that just came from Nebraska Furniture Mart, and their lender lost their lid and said, "Go back and cancel it. We cannot close this deal now until maybe the end of the day or tomorrow until you get that reversed." I mean, people get excited. That's the bottom line. We are human,
You
and they
have to
don't
make
listen.
it. Got to really make it clear right off the bat. A pre-approval to buy a home does not mean you're pre-approved to go buy a truck or a refrigerator or a new wardrobe.
Well, that's
or that
smaller than a home.
trip to Bermuda. Well, some of them aren't. And
Wow.
but no, I think that's the big key. And for any new realtors out there, realtors out there, you really, really, if it's your first, second, third, or whatever client, you got to stay with them. I mean, every other day, every week through the process. Don't shop. Do not shop. Don't shop. Don't change anything. And it happens. And Jeff is right. When it really hits the fan is at Jeff's table in his office. And now you got to go sleep in that truck.
No, you have to deal with Mama, who's not getting her house that she wanted. I got to tell you, going outside that title company, it found out he bought that truck on Friday. They were closing Monday morning, and boy, howdy, all the way out the door was a stream. It just, I felt sorry for him, but he made that bed. Now he's going to sleep in it because they went, like you said, that whole family was sleeping in that new truck.
Now, if you do make the mistake, and we need to cover this, if you do goof up, after you get done apologizing to whoever you need to apologize to, and if you're still together and still want to do it, talk to Blair or your lender and get after it again, because so many good lenders have ways to, fix it up quicker than you think. Sometimes maybe not, but don't give up. Stay in there, learn from your mistake, and move on.
Just talk with your lender, be in constant communication when you make those decisions. I'm not saying you can't do braces for the children or something that you need to do or feel you need to do, but double check with your lender so it doesn't stop the mortgage process and it's a surprise to you and to everybody. And it really makes Jeff feel bad whenever he has to say, well, sorry, we can't close.
I know, and he already gave them free coffee and goodies and stuff.
Yeah.
You can't even
You already had enough snacks. You're going to need those snacks in the back of that bed of that truck.
We want paying people in here to eat our stuff.
I'm still trying to figure out, they got those nice offices that they invite you to when we could be closing in front of the home they're buying.
And just
Everybody's got to go see Jeff.
send me the cookies in a supply package to my new home.
Okay, I think we've covered that. No new large purchases. What's our bingo card now, Mark? Mr. Monkey Bug.
There it is.
Tom?
Well, this means I win twice today if I lock your interest rate.
A winner. And we only did it once today.
Yeah,
That
I
was
won
2
the
weeks
last
ago.
show. I won this show. You guys are suckers.
Maybe we feel sorry for you.
I think that is your lucky blue shirt.
This
That's
is
it.
this is an interesting story. Last week, of course, I went to Cleveland to see my grandkids for the first time in quite a while, and sat down with my grandson. And the first game he wanted to play was checkers, and he beat the pants off of me for the first 3 games without even thinking about it. And I'm like, what is this? This is a ripoff. I'm going to have to concentrate. I finally beat him, yes, but it took a while.
You
You
should
need
sell
all
that
the-
as though he got his smarts from you, sir.
Well, he's a whole 9 years old.
I think Grandpa let him win, but that's just me.
Well, Grandpa said, yeah, let's play chess.
Exactly.
Lock your interest rate. So locking the interest rate requires a commitment normally done on a 30-day cycle, but it can be done on a 15. But locking your interest rate writes down that you can clear to close you are able to move forward in closing on the mortgage on the home purchase, but locking that interest rate is a decision made by you, the client, not the lender. Now, if you're locking with a new purchase, home purchase, that sort of thing, you're going to know what you're locking toward or what you're being offered, and they're helping to pay. But a lot of times, as we talked about interest rates the last show, what are those loan level price adjustments and how are they affected? What is the market doing? As we look at the market today, it's already up 5 bips. This is something that you want to watch with your lender, be aware of when is a good time to lock so that you may catch the market at a good place instead of a bad, and especially working with a lender that does adjust as the market goes. They're not locked in for a week or a day. I mean, we're seeing, Tom, I'm seeing adjustments changing anywhere from 3 to 5 times a day.
It's been pretty consistent that way, up and down. It's one of these more volatile type markets. And as we get closer to May, we'll probably continue to see this volatility that's not unheard of. I mean, I've lived through 3 market changes or 3 price changes in a day before, but to have it like this for a long period of time is kind of unexpected. You typically hope things will calm down for a period of time, but investors don't know which way things are going to go. And we might mention this to our listeners out there. I mean, if they get a good rate, they should lock it in and say, okay, I'm going to live with this. There's no playing the market deal. I mean, yes, you can wait until the last 15 days and get a slightly better price on a pricing situation than you can on a 30-day or a 60-day. But I'd rather have the confirmation and the feel that I know what I'm going to be getting at the end rather than try to play the market, because that's usually not a very fruitful way to go through your getting your new loan, is having that stress on top. And I remind people that you always know if your rate is locked or not on the loan estimate. It tells you there. That is something you always want. It's at the top of the loan estimate. It's the first thing you want to look at. Is my rate locked that I'm getting a quote on, or is this something that could change in 3 hours?
Yep.
So Blair, educate me. I come to you, I'm getting a loan, I bought my dream home, we're under contract. Day 1, we lock it. Day 25, the rates have dropped half a point. Am I still locked? What is it?
You're still locked.
Can I reset it? Can we go back? Or does it start the clock over?
If we were to start the clock over and blow up your loan, that's really, you literally start your whole loan process over, and the property has to sit for 30 days before we can actually put a loan contract on it again.
Okay.
You cannot just blow up your loan and redo it real quick. You lose days, you'll probably lose the home over that. Now, Tom is exactly right in locking rates right now with the volatility. I'm looking over the last 35 days, and I have 1, 2, 3, 4, 5, 6, 7 days of volatility over 50 bips move. I've had 300 bip move days. So what does that mean? Basis points move. We normally saw these things inching between 5, 10 at the most. Now we're seeing jumps of 50. And May 10th is supposed to be an unbelievable day in the market for rates. But that's because we're changing out data from last year. It's a 12-month cycle. We'll be changing the CPI report out, and we're expecting to see a good drop in rates that day. We've seen the last 2 have been over 100 bips plus. So be aware, locking your rates. But I got to tell you, if everybody's focused, Fannie just put out a survey. It really bothers me that this is, with the spring home buying season now upon us, a large majority of consumers continue to believe it's a bad time to buy a home. And this is purely due to locking unfavorable mortgage rates are the primary reason for pessimism. If you're going to own a home long term, and you're going to get out of paying somebody else's rent. And I'm sorry, Tom, as you're an investor, I know you help people do that, but you're investing in yourself. You're paying this mortgage to yourself. And the cost of dollars is the cost of dollars. What would you say about 13% interest rate as opposed to 6 or 5? And you're going to see increase in equity in that home as you grow. I just highly recommend don't let mortgage interest rates decide whether you buy or not. If that's your one deciding factor that's keeping you from this, get over that, because you're never, historical lows are historical lows. 2.5% will never come again in our lifetime. But I bet you we can get to 4. But are you willing to wait until next year? How much are you paying into this home you could have paid instead of rent?
Well, there's a couple of different kinds of buyers out there. The buyers that can afford rate changes and go on their merry way, and the kind that when interest rates went up, the cost of living went up, and they just simply choose not to jump into that. And the price for the home went up per month. And so you're dealing with all sorts of people, and they're dealing with a lot going on too. I mean, there's a generation now of professional people out there that 3.5 is normal. So why don't we wait for that to come back? Well, and that's your point, Blair. You can wait as long as you want. That ain't coming back. But you don't have experience in the market like Tom said. He's been through it 3 times. Stuff like that. First time in my lifetime it was down at.
When he started, he had hair.
I think it's interesting. Like Fidelity we have a loan app, not a loan app, but an estimated net sheet app. But what's interesting, if anybody, you can get online and contact us if you're wanting to look at it. But there's a comparison when you look at your cost per renting over 5 years compared to owning a home. You would be amazed how much more your cost per rent is. And it's a very accurate way to calculate and look at what you're paying.
Yeah, it's a good point. And you try to educate, because knowledge is power. There's folks that don't, they're in a certain position the way they're in because they don't do stuff like that. And renting seems like the more least, I'm not tied up. I can get out anytime I want and that kind of thing. So that's all part of it. You hear all different stories. I mean, there's realtors out there that strictly deal with people with means and they probably don't run into it as much. But when you're dealing with the average person and, first time home buyers and things like that, you hear a lot of it and you deal with it. And that's why you try to get them in with Blair and you try to get them in with the credit repair lawyers or the team to get them going in the right direction. And when they say you're good to go, you're good to go. But part of it is attitude too. You got to take that first step.
Well, that attitude feeds off of when Blair used the term unfavorable rates. Well, if we all had our perfect world, I wouldn't have any rate at all. I wouldn't have a mortgage. I wouldn't, I would have paid cash for my home.
A lot of countries don't.
It is what it is.
Can I share something real quick with you that is an interesting data point, and I'm sure Tom can back this up. I was shocked to learn that we are the only country in the world that offers a 30-year mortgage fixed. Most countries offer only ARMs. That means adjustable rate mortgages. When you buy a home, you're buying an adjustable rate that it could go up, it could go down, it could go anywhere. We are the only country that has gone long-term into a fixed mortgage. It ought to be a benefit, whether it's at 2.5%, 4.5%, 6.5%, to understand the value of what we get. But we don't know that. And we don't accept that opportunity as a great one because our neighbor down the road, well, they got a mortgage 3.5 years ago and I want that. It's just not going to happen all the time. And again, for this past history, I blame it on the Fed, which is not a government entity, but all the purchasing that they did for so long has put us in the situation where rates are as well as where our inflation is. But I think we've talked about locking rates. You can lock them 15, 30, 45 days long. In fact, you can lock them up to 2 months or 12 months for a construction loan. So be aware of those opportunities, be aware of your mortgage, and be a part of that decision. Nobody has the right to decide for you what your rate is but you.
Well, quickly before you leave it, when that lock expires, what is their avenue after that?
If we're having to extend the lock, there is additional cost to that. And those things fall on certain people in the process. It can fall on the client themselves. Most of the time, it falls on the lender. We end up paying for that out of our own pocket for that. But a lot of times we have to redisclose the loan. As Tom has talked about, the loan estimate and the closing disclosure, those things can't change unless there's a loan lock reason for an extension. And we can extend up to another 30 days, but it should never go that far. It should always be within the next maybe 10 days for an extension, or there's a major problem somewhere. Okay?
Yep.
Any other comments, Tom?
No, I'm feeling good about the conversation, knowing that, of course, I've won 2 games today. So
What was that little animal you showed us? Was that an alligator?
Yeah,
That's my best bear. Oh.
Oh, look at that.
that's my little friend.
Did you catch him in your backyard?
I caught him in my toilet.
Oh. Okay, let's get back to our
You
bingo
must
card.
be from Flushing, New York.
Wait. Okay.
Back,
We've
forth, back.
avoided large purchases. We've locked interest rates. I can't believe that Alan hasn't done get pre-approved.
Okay, is it my turn? I say
Yes.
get pre-approved.
Why?
Wow.
Well, I mean, the basic reason is until you get pre-approved, unless you have cash, you're not going to get a mortgage and buy a house. And I guess we even go earlier than that. A lot of people don't know what a mortgage is when they're doing their first purchase. But first step in any home purchase, unless paying cash, is pre-approval.
But Alan, I want to go out and see this home. I know I'll get the financing. I'm going to go see this home.
Every realtor does it different. And now myself personally, I will invest in somebody once just to meet them face to face at a house and talk to them about things. And I'll have a better understanding once I talk to them on, seriousness, things like that. And then after that, if they don't do the pre-approval, I'm done with them. But I like the investment of the first call with them, show them a house or two, get to know them as a person, and, build up that trust and loyalty. Once in a while, I did it for nothing. They don't get pre-approved and it's all talk. But, over all the years I've been doing it, it's been a pretty good way to go. But in general, no pre-approval. I'm not going to spend $100 showing you homes, and I'm not going to spend my time telling you things that are never going to matter to you. So, got other things to do. Basically, that's it.
Get pre-approved. Know what you can purchase and know what loan program is best for you before you go out and actually shop. One, an offer is not going to be accepted without a pre-approval letter unless you're showing cash. And so pre-approval is probably one of the key first steps for anyone, first-time home buyer to, senior citizen Tom, to be able to purchase a new home is have a pre-approval done if you're financing.
I think you look good, Tom.
It will only allow you to do more. Now, how long is a pre-approval for?
That's a good lender question. How long is it for?
Normally,
Probably a day if they go buy a car tomorrow.
That's why he's the champion.
normally they're good for 90 days due to the credit report that we can utilize. Otherwise, we're having to re-pull it. Therefore, we don't know what's happened with your credit. Therefore, the pre-approval is over. But getting re-updated or so forth is fairly easy once you're pre-approved. We've really gone over your income, your assets, that sort of thing, and we can see by your credit report if you've done any major purchases since the time before.
And in
So
late
normally a
2020
90
and 2021, that 90-day thing came under fire quite a bit. There wasn't enough housing. People that were pre-approved, weren't getting into a house. There just wasn't a house to get into. And that had to get revisited. So most of the time, though, in general, folks, it doesn't, we'll find you a house in 90 days or less. But there are times in markets that it can be an issue.
And markets being normally homes that are still moving in the 250 to 400,000 are moving fairly fast. As we get up higher in price, they are staying on the market longer. That's what he's saying by market differences. I was really shocked to hear about the multi-million-dollar homes that those aren't being financed. They're being paid for by cash for the most part. In excess of 80% of them are. So you talk to some of those custom home builders, everybody must be moving from California or something. I have no idea, but
That's where most of our cash buyers are from.
okay, back to our bingo card. Jeff?
Yes, sir. Determine down payment.
Oh, that's a good one.
That's a doozy right there.
Yes, indeed.
Determine down payment. Down payment in a mortgage comes down to how much are you putting into the loan itself. As much as zero with a VA or USDA, and it can be it can be 100%. So that's a cash deal. But down payment is decided by the borrower and what you're approved with the lender. A lot of times with conventional, 3% is the minimal, normally 5%, but there are special programs that allow you to go down to 3%, and FHA is 3.5%. Of course, VA is 100% financed by the VA and requires a DD 214 and veteran honorably discharged. USDA requires the home that you're purchasing to be in a geographical location that is encouraged to be developed by the USDA. And those are defined and they change. So a USDA approval, that low area could go away in a 6 month. Is it 6 months or is it a year, Tom? Once they put that on there.
It could go away, the approved area,
Yes, sir.
randomly at any moment.
Random. Okay. So there's not a time limit. It can go away even while you're in the loan process. So getting approved with USDA 100% financed as a civilian, it is a long, arduous process. And by the time you get it all done, you may not be able to buy in the area you want. So you have to be really flexible with that solution. Now, each of these other loan programs have down payment assistance. They're not as out there, they're not readily available as they were before, but they still are out there for down payment. But you decide the amount that you want to be able to put down by your pocketbook and your willingness. 20% on a conventional allows you to decide if you want to pay escrows or not in your mortgage. That allows you to pay your annual taxes and insurance on your own and only pay principal and interest. But normally a PITI, principal, interest, taxes, and insurance on all governmental loans is to be paid, and the down payments are to be defined by the guidelines. 3.5% is a down payment for FHA. A lot of people call that the first time home buyers program. And there are down payment assistants that do pay up to 5%. So that gives you your down payment and closing costs. But down payments are decided by the borrower. Are gift funds available to be utilized for down payment, Tom?
In all those different loans, yes. And the same guidance, same rule applies for all of them, which is kind of unusual now. There used to be different formulas, but you can get part of your down payment, all your down payment, all your down payment plus closing costs, all your down payment plus closing cost and prepaids now, given as a gift from a person with an interest to the transaction, not one that's outside an arm's length. In other words, we normally label the people that can give gifts as relatives, domestic partners, or fiancés.
So, Tom, I have found the perfect home. I'm under contract. Blair is handling my mortgage. I'm obtaining my loan through his company. He has told me I need to put 5% down, or that's the decision we've made. Does it benefit me then to put 8% down?
Well, your next step to actually putting the amount down, 8% down if the minimum, this is a conventional program you're probably talking about, 8% down would be a compensating factor. If you put down more than the minimum, that always will help you exceed the guidelines for ratios. But your next big break as far as interest rates are concerned and mortgage insurance would be 10%. So there is a little bit of a difference. Yes, it will help you qualify to put down more than the minimum amount on any program. 3.5% with FHA, 0% with VA, 0% with USDA, and 5% with FA conventional, most of their programs. But at the same time, you don't really get stepped up as far as helping you with technical part of the pricing and that type of deal with conventional loan until you go from 5% to 10%.
That 8% will probably change your reserve requirement only. That would probably be the only thing that it would change. A 10% change would change your MI cost, possibly even better your rate a little bit. Those sorts of things happen. And believe it or not, if you put 20% down and you don't put escrows, guess what happens to your interest rate?
Well, I'll guess that it goes up.
Goes up.
Yeah.
It goes up 1/8%. 1/8%. Now, if you put 19% down, you pay escrows. That's probably the max, the best way. But again, you're required, once you stay in that mortgage, you cannot get rid of MI for a minimum of 2 years. Right, Tom?
12 months.
12 months, excuse me. So 12 months. So at 18 months, we look at the value of your home as well as what you paid in, down payment, so forth, to see if we can get rid of your MI.
You said MI, you mean mortgage insurance?
MI or PMI or MIP.
Well, MIP can't ever go away, so that would not be a correct statement.
I thought FHA you can, under perfect conditions, FHA MIP can go away at one point.
Never.
Never.
Not unless you put down 10%. But who puts down 10% on an FHA deal? If you put down 10% on an FHA,
You don't need to be doing FHA then, right?
well, there's a guy in Washington, D.C. that actually flies to your house when you move into the house after you bought it with 10% down, and he gives you a hug on the doorstep.
Full service.
It's rare to see it.
Yeah. So yes, to get rid of mortgage insurance or your private mortgage insurance premium, you have to be at 20% equity position. So I think we've gotten that one done. We can bring back our bingo board. Let's talk about final walkthrough. Final walkthrough. What does that mean? I don't know what a final walk. Does it mean the last time you ever walked through your home?
It might. I'm with
Well,
Tom.
last
It could
week
mean
on the deal
anything.
we had closing, the final walkthrough meant the buyers decided we don't want this house. We're going to terminate.
Well, there's a couple things that go on with a final walkthrough. If you're buying a house and you went in your diligence period and the option period, and you had some repairs negotiated, that's a good opportunity to make sure they were negotiated and actually repaired. So you go to that house before you close, and you walk in there and you give it a good look and make sure it's the same thing you bought. In other words, that when they moved out, they didn't drive through the garage wall. It's the house you bought. And by that includes all repairs that were negotiated. So a final walkthrough is key. It's usually done the day before close or the day of close, sometimes earlier, but not usually, because it pays to do it kind of last minute, so you actually know what you're buying when you go to close. And,
If I may, a piece of advice with all the transactions that we close, do it the morning of. Schedule your closing time to coincide so that you can do your walkthrough the day of. And here's why. We have had several closings over, and again, this doesn't happen every month, but you do it the day before because someone says it's more convenient this way. Make it about you. This is your home purchase, because Overnight, someone came in and has stolen an AC unit before. Overnight, there have been Texas winds that blow down a fence. And those things come up after closing when you go to move in and realize, holy cow, the AC unit's gone. It was here when we did the walkthrough yesterday.
Can you believe the family that just purchased their home? The truck moved away, unloading into their new home. They just got in there and that storm came through and the tornado demolished the home with their stuff inside. Thank goodness they were safe inside the internal closet, but literally she was on the newscast announcing they just bought the house.
Wow.
I've been through that with a home I was selling, and it was good. I had a good experience, realtor on the other end of the deal too. And but the house got a lot of damage. It wasn't a direct tornado, but it was those straight line winds, which are very damaging here in our area. And but we got through it. Nobody panicked, and we just kind of delayed things a little bit. One, when there's money on the line and there's a borrower involved, you got to fix it up. So, but the other is you get through it. But yeah, it's the walkthroughs are really important, and the later the better, obviously. So yeah, final walkthrough. It's definite mandatory thing to do.
Okay, this house you sold me, Alan, we're walking through it. It's a couple hours before our closing. And I can't believe it. They took the pictures off the wall and there's still nails in the wall. And with this one place where the picture must have hung, there's this shadow where the picture hung because the paint, hasn't faded. And the carpet, they look at this. They messed up the carpet when they moved stuff out. Can you believe that, Alan? I don't want to buy this house.
Yeah, I believe that. Now, personally, never been involved in anything like that over the years, which I'm thankful for.
Really?
Yeah.
Well, am I your first picky buyer? Is that you've been ripping off?
No, you're
What's
you're
going on here,
first,
Alan?
huh?
You told me this house would be clean and nice when I moved into it.
Well, I tell you what, there's a couple things. One, if it's not hello?
I'm listening.
Yeah. I said, if it's not what you expect, then we have to go over why it's not what you expect.
Well,
And
I just
if
told you what's wrong with it.
Yeah. If it's a major thing, you stop the deal.
That's a major thing. Look at this carpet. It's dirty as it can be. There's places where people walked on it right there. Look at that.
Well, there's obviously things you can do. You cannot close.
Okay,
And-
let's not. Call Jeff up.
Carpet cleaners are on their way.
So, I, again, personally not experienced it, thank goodness. But if I did, I'd have to deal with it. And if somebody doesn't want to close, you can't make them. Contracts have been signed and deadlines have to be met. Lenders are involved, titles involved, realtors are involved. So you have to get through it. And generally, now I've been through it with appraisals where they weren't met at the very last minute and we got through it. So you have to go through it as what it is. Personally, as a realtor, I moved into this house, and I had a few of those issues going on. But I didn't care. I was going to paint anyway. So that was not a big deal to me. But yeah, if it's major stuff like the carpet is completely different than when we bought the house, or the walls knocked out or stuff like that, you can't force anybody to buy a house. You have to go through the legal system. And that generally means delay until it's made right. And beyond that, stay in my lane. Follow the paperwork. That's what
Okay,
I
so
got.
I'm hearing you're not going to clean the carpet for me.
If it's you, Tom, I will.
He won't ever let it go.
I'd do anything for you, Tom. I got him to snort. That's pretty good.
Twice.
Yeah, that's good.
I feel special.
You are special, Tom. You are very special.
I have special needs.
You're just figuring this out now?
Yeah, well, I live with it every day.
Maybe that's the next box in bingo, special needs.
Well, we have taken the bingo card effort to the max. I think we're running out of time here, and if you have additional questions or you have additional comments you want to know about, find us at welcomehomeradio.net. Find all our past shows there at radio.net, along with our great sponsors. Like, share us, see what you have, ask us some questions. We definitely encourage that. We hope this has been helpful for you, and I hope that April has just been a blessed month for you as we go into May. I'm Blair Thomas.
And I'm Tom Holm.
I'm Alan Pace.
I'm Jeff Duffy.
God bless. Y'all have a great rest of your week.
Welcome Home Radio production provided by Lunatic Digital. Check the listing of this podcast for the links to our sponsors. And don't forget to like, share, and follow us on social media. Visit welcomehomeradio.net for more information.
This was a Lunatic Digital production. Visit lunaticdigital.com for all your digital needs.